What's going on, ladies and gentlemen? IGTV, YouTube, welcome to the Credit Plug channel where we talk about everything credit. We teach you how to build primary credit accounts for both personal and business credit profiles, how to establish relationships with different financial institutions, and we show you the ins and outs and all the different nuances with establishing relationships, what underwriting guidelines there are, for example, with specific banks. So we walk you through all of that. So today I wanted to go over business credit, and I'm going to go over the major business credit reporting agencies, and also dig a little bit into how your scores are actually calculated on the business side. So, all right. All right. So we have Dun&Bradstreet, which a lot of people know about. Dun&Bradstreet. And then you have Experian, Equifax, and so then you also have the Small Business Financial Exchange, so that's SBFE. Now, the Small Business Financial Exchange is a consortium of different lenders who share, credit and other types of transaction data among the other members. So, Dun&Bradstreet, Equifax, Experian are all certified data vendors for SBFE. So, if you have an account with a particular lender who's a part of the SBFE, and that's composed of some of the largest financial institutions in the country. So likely, if you have a business account at a major bank, they're likely to be a part of SBFE, and they share information among each other. So, it's likely that a lot of the data that's actually making it onto your business credit reports from these three are actually, being shared amongst, because, they all do business with each other. So, with Dun&Bradstreet, their major, they have several different metrics that they capture. But most importantly is the Paydex. Okay, so a couple things that go into the Paydex. A couple factors. Your days beyond term. So how many days beyond the due date that you pay for your invoices. They also take into account your SIC and NAICS code, and so what that is basically they're both business classification systems that categorize your type of business into a defined category. It's just a way, for credit reporting agencies and the IRS and other organizations to understand what type of business you're in, the number of employees you have, the time in business. And so to get a Paydex score, you need at least 3 separate payment experiences from 3 different businesses. So once you have, enough trade references reporting on your Dun&Bradstreet report, then you'll get a Paydex that's generated. And with Paydexes, the goal is to have at least an 80 or better. So Paydex scores are based on a scale 1 to 100. And so the higher the score, the better. But anything over 80 is ideal. They do have other metrics like supplier evaluation and other delinquency metrics as well. But the Paydex is the most important. So you're going to want 80 plus. That's the key goal for the Paydex. So Experian has, like I said, they all have several different metrics that they capture. But I'm only going to go over the most common, and so that's the IntelliScore. And so the IntelliScore uses very similar metrics as the Paydex. So they're looking at the number of trades that you have. They're looking at the type of trade. So if it's a revolving or if it's a net 30, those are weighted differently. They're looking at the days beyond term. They're looking at how much credit you're actually using, and also what proportion of accounts have you used within a 6-month period, as well as they're looking at the number of inquiries that you have over a 9-month period. And so the IntelliScore is broken up into 5 different, risk categories. So at the bottom, you're going to have high risk. Then you're going to have, and so high risk is basically to be high risk, you're going to have some negative information under your business, late payment or derogatory, something like that. Usually if you're a brand new business, you're going to start off with a mid to high to mid risk. And so generally you're going to start off somewhere, depending on, there's several factors, the type of business that you're in, the number of employees, how long you've been in business. Those will generally, affect what score you initially get. But with no data reporting, you're usually going to be somewhere in the, from 26 to probably 29, starting out with your IntelliScore. And so the key with the IntelliScore, you want to raise your credit profile to a low risk, and the IntelliScore is on a scale from 1 to 100. And so to break into the low risk category, you're going to have at least a 76 or greater. So 76 or greater is low risk. All right, and there's 5 categories. There's medium risk, medium to low risk, medium risk, medium to high risk, and then high risk. So those 5 categories. So that's the IntelliScore. So then we have Equifax, and Equifax is probably the out of all of them, probably the least utilized, at least from my experience. Generally, D&B Experian, the Paydex and your IntelliScore are going to be pulled the majority of the time. Equifax does have several different metrics that they capture, but they have, the business delinquency. Score. And so there's several different variations of this. I'm not going to get into specifically which one, because there's different indicators based on for example, the risk of a company going bankrupt within 12 months. There's financial delinquency risk categorization, so the likeliness of the business to default on financial debts. So these are basically the 3 business credit scores. But then there's also a very, very important one, and this is usually something that you're not going to get to until you've established your business, and that is the FICO SBSS. The FICO Small Business Scoring Service. So the FICO SBSS actually is a combination of your business credit scores as well as your personal credit score. So that's the catch with that. And so, and as well as your company financials. And so, this is used as a pre-screen for SBA financing. So if you want an SBA loan, you're going to have a qualifying FICO SBSS small business scoring service. That's what that stands for. So the minimum per SBA standards is a 140. However, lenders are going to want to see that you have at least a 160, right? So, right. So this is really going to be the goal, but this is really what the minimum that you would absolutely have to be at before you can even consider it. And generally, the FICO SBSS isn't going to come into play unless you're, seeking $1 million or greater. But it does combine your business credit as well as your personal credit. So it's still going to be hard to get a high score with this unless you have good personal credit as well as good financials. So it's not just business credit, but it's business credit, personal credit, and financials. So that's just one thing to keep in mind. So that's all we wanted to cover for today. These are the important metrics that you want to keep track of with regard to business credit. And if you have any questions, you could definitely email us. You have our contact information. Until next time, y'all take it easy, and we'll talk to you soon. Peace.